The stock market is a system where shares, or stocks, of publicly traded companies are bought and sold. It provides a platform for investors to invest in businesses by purchasing ownership shares, and for companies to raise capital by offering these shares to the public. Key players in the stock market: investors, individuals or institutions like pension funds, mutual funds, who buy and sell shares. Companies, businesses that issue stocks to raise capital. Stock exchanges, platforms like the New York Stock Exchange, NYSE, or NASDAQ, where stocks are traded. Regulators, organizations like the Securities and Exchange Commission, SEC, oversee the market to ensure fairness and transparency. Brokers, intermediaries who execute trades on behalf of investors. When you buy a stock, you are essentially buying a small ownership stake in the company. The price of the stock represents what investors are willing to pay based on the perceived value of the company, its growth prospects, and broader market conditions. Factors that cause stock values to go up or down. Stock prices fluctuate due to a variety of factors, including company performance, earnings reports. If a company's profits are better than expected, stock prices often rise, and vice versa. News, announcements like product launches, mergers, or leadership changes can impact stock value. Economic indicators, interest rates. Lower interest rates can make borrowing cheaper, boosting corporate profits and stock prices. Higher rates may do the opposite. Inflation. Rising inflation can erode the value of future profits, causing stock prices to drop. GDP growth. Economic growth often leads to better corporate performance, pushing stock prices higher. Market sentiment. Investor confidence, optimism, or fear about future market trends can push stock prices up or down, even if nothing significant changes in the company's fundamentals. Global events. Political instability, wars, pandemics, or economic crises can trigger sudden changes in stock values. Supply and demand, buyers versus sellers. When more investors want to buy a stock, high demand, its price goes up. When more want to sell, high supply, the price goes down. Industry trends. Stocks in certain industries may rise or fall, depending on sector-specific news. For example, tech stocks may go up if there's innovation in AI, while oil company stocks might drop if renewable energy gains more traction. Market speculation. Sometimes, stock prices are driven by speculation, where investors bet on the future price of a stock based on anticipated changes, such as a company being acquired. Is it a good idea to invest in the stock market? Investing in the stock market can be a good idea, but it depends on several factors. Advantages. Potential for high returns. Historically, the stock market has provided higher returns than other types of investments, like bonds or savings accounts, over the long term. Ownership and dividends. Owning stocks gives you partial ownership of a company, and in some cases, dividends, a share of the company's profits. Liquidity. Stocks are relatively easy to buy and sell compared to other investments like real estate. Risks. Market volatility. Stock prices can be volatile and subject to large swings, which may result in losses, especially in the short term. Uncertainty. Predicting market movements is difficult. Economic downturns, corporate scandals, or unexpected events can lead to significant losses. Time commitment. Successful stock investing often requires staying informed about the companies and market trends, which can be time-consuming. Is stock market investment right for you? Dear long-term investors, if you're willing to invest for the long term, 5, 10 years or more, the stock market tends to offer strong returns. The key is to ride out short-term market fluctuations. Diversification. Spreading investments across different sectors and companies reduces risk. Investing in mutual funds or ETFs, exchange-traded funds, can help with diversification. All risk tolerance. If you can handle market volatility without panicking, stock market investing can be rewarding. Otherwise, lower risk options might be better. Overall, investing in the stock market can be a good idea for those who are prepared to take calculated risks, stay informed, and have a long-term strategy.